Good evening, everyone. Welcome once again to Olguter's weekly webinars every Tuesday and Thursday, 7 p.m. So, welcome, guys. We are back. We are back in business. It's been a while since we have these weekly webinars, but Alguter has sponsored this once again for us to share and learn every week in the Forex market. So, yes, thank you, whoever you are, iPhone. Miss your lessons for a nice strategy. Yes, we are always revealing every secret sauce here in Algoter's webinar. So, always stay tuned Tuesdays and Thursdays. Huh? Don't forget this. Yes, Mr. Nani, welcome, sir. Welcome back. We are back stronger than ever. And we have to thank Algoter for this opportunity once again, where we can gather every week and learn much more about Forex. Because, even for me, as an experienced trader, I'm still learning a lot. There's like an endless knowledge of learning. In Forex, it's endless. You can learn any new things every now and then. So even today, I'm still learning a lot, and in return, always sharing the same to you guys. So welcome. I can see there's 13 of you here today. She, Leon, John, Larose, Miguel, Nani, and Larry Tamar. Welcome to you guys. So hope you will bear with me as we discuss through all these slides tonight and go through these topics, okay? So the topic for tonight is about the fundamentals on Forex, okay? The fundamentals, meaning the important things, okay? The basic stuff. So we'll go through that as the main content. What is Forex trading? Candlestick patterns, trend lines. What is a pip? Okay, the trading process, the trading method, and the difference between financial and physical trading. All right, as you all know, money, you can earn money in many different ways, and Forex is one of them. Okay, back in the day, back thousands of years ago, okay, people trade, but they trade with the with the with stuff like you give me one cow, I will give you one horse. Okay, they are barter trading. So it's it's the same concept. Okay, you give something and you get something back in return, at least maybe to the best, to have more of what you've invested. And now in this era of Forex, okay, we are now digital, very easy. Even you can trade anywhere in the world, even just staying in your room, and you can make money, right? So, yes, good evening, Mr. Kent. Welcome, sir. Mr. Paulo, welcome to you guys. Huh? Okay, so let's go now because we have a lot of slides here. All right, we'll go to the first one now. All right, there's a secret giveaway alert again. As you know, Algoter is very generous to all its members in the community, and they are often offering a limited offer of 50% deposit bonus. Huh? So if you will invest 100, you will get 150, 500, you will get 750. For $1,000, you will get 1,500. So avail, my friends. You can never have this in any broker. So get this opportunity, and you can have extra to trade, and make the most out of this. So please, only 5 slots available. Do your best. Find some money somewhere, to your friends, to your family. Say this is the chance of a lifetime. So take this opportunity, my friends. All right. Very, very nice. 50%, 50%. You cannot find this anywhere. Okay. So before we begin, who are newbies in Forex? Any newbies? Can you type one if you are a newbie? Type two if you are an experienced trader. So I will have some idea of the audience for tonight. Okay, there's one newbie, two newbies, three. All right. Okay, four. Okay, there's an experienced one, Mr. Kent. Okay, five. Miguel is a newbie. Okay, so majority of you are newbies. Very good. That's not a bad thing, because everyone starts somewhere. Even for me, I started new in Forex. I don't know nothing. I have zero knowledge about Forex, how to read the chart, what is these things. And you've made your first step, as you can say, how to understand this. Okay, so what is Forex trading? Forex, okay, the foreign exchange market, okay, which is usually known as Forex or FX, is the largest financial market in the world. The Forex market is a global, decentralized market where the world's currencies change hands. Okay. So just like when you go to any money exchange, okay, you want to change your money. If you are an OFW, you will go to the foreign exchange, to the banks. I want my peso back. So you give them your $100 or whatever currency, Japanese yen, Saudi Riyal, whatever. Okay, you are doing Forex already, but you don't know this. Okay, so this is what it's all about. So due to the wide range of market participants, including central banks, financial institutions, corporations, hedge funds, and individual traders, exchange rates, okay, by the second. So the market is constantly in flux. Yes, it's very true. Okay, that's why when you want to change that money, you will get some difference. Okay, it may look small, but in the grander scheme of things, okay, if you will now have $1,000, $100,000, you want that in peso, then you can imagine the profits there. Okay, of this money exchange. So that's one insight for you. And most of the currency transactions, okay, that occur in the global foreign exchange market are bought and sold for speculative reasons. Currency traders, also known as currency speculators, buy currencies, hoping that they will be able to sell them at a higher price in the future. Which is true, okay? If you have $100 now, I don't know, after 1 week, 1 month, that $100 exchange rate will now become 60, now it's 59. Okay, one time it went 60, 61. So there's a two peso difference there now. So imagine, if you will have a lot of dollars and exchange that to another currency, then you get more in return. So compared to the measly 20 billion per day volume of the New York stock, okay, I think you've heard New York stocks, okay, NYCE, something like that. So the foreign exchange market looks absolutely ginormous with its 7.5 trillion. Imagine, guys, 7.5 trillion. Who knows? It could be 8 trillion now. Okay, it's just expanding by the day. So the forex market is open 24 hours a day. Means Monday to Friday, 5 days a week. Only closing down during the weekend. So Saturdays and Sundays, Forex is closed. No one can trade except for crypto. In the crypto market, you can always trade this 24/7, not 24/5, but 24/7. The crypto market is open, but for the Forex market, it's open Monday to Friday. Okay. So in Philippines, right now, because of the daylight savings time, it's 7 o'clock in the morning until until 5 o'clock. Or yes. So imagine this chance, okay, of you trading throughout the day and make money in the Forex space. Okay. So that's it. And what else? Now, have you I think you've seen this candlesticks before, huh? For the newbies, because when you open the charts, okay, you will see these things, these candlesticks. There's a green and there's a red one. So green means what? Anyone can answer me this? When you see a green candle in the chart, what does that mean? Any idea? Albert's question, do we have a session on Friday evening? No, no, sir. Fridays, we are not having a webinar, only Tuesdays and Thursdays. Okay. Keep that in mind. Mark that in your calendars. Make some alerts. 7 o'clock every Tuesday and Thursday only. Okay. Okay. Back to the question. When you see a green candle, it means Kent. Okay. Very good, Kent. It's bullish. It means people are buying that time. Okay. When you see a red candle, it's the opposite. So people are selling. It's bearish. Okay. Yes, very good. It's bearish. Okay. Why bullish? Why bearish? For the newbies, why do we call this a bullish candle and a bearish candle? Any idea? Do you have any idea why it's called bullish and bearish? You can chat, huh? You can send me a message in the chat. There's no wrong answer here. Okay. It's okay. Bullish uptrend. Okay. Ken says bullish uptrend. Okay. Okay. See, when you say bullish and bearish, you are in the back of your mind, you have these animals, a bull and a bear. Okay? A bull, okay, Albert says bullish, going strong, bearish, weak. Yes. Yes, in essence, yes, you are right. Okay? But let me explain to you why they call this bullish and bearish. Okay? In a bull, okay, a male cow. I think I think I got the interpretation right. A bull cow, a bull, okay. When it fights some bull, when it fights another bull or another animal, okay, the tendency of the bull, okay, it will attack using the horns, right? It will attack using the horn and it will swing its head upwards, right? It will swing its horn, its head to attack the animal or whatever, even a human, okay? And then so it's going up. That's why it's called a bullish trend. Okay, that's why it's called bullish candle. That's the idea, my friend. Okay, a bear, on the other hand, when it wants to attack another animal or another bear, or a human, the bear will swing its arms, its hands or paws downward, right? It will attack you like a Wolverine. Okay, X-Men, Wolverine in X-Men. Okay, he has this claws. Okay, and he will strike you going down in the downward direction. That's why it's called a bearish. candle or a bearish trend. Okay, my friends, understand now? Bullish, upwards, buying. Bearish, downwards, selling, huh? All right, I hope that's all clear now. Now, candlestick patterns, cheat sheet. Okay, you can have this, you can screenshot this now if you want, and you will have more. This is now the start of your Forex journey, okay? What are these things? Because if you want to read the charts well, you need to understand this candlestick patterns, okay? So let's go to this one example, okay? There's a long green candle, okay? This is the bullish candle, okay? And a long red candle is a bearish candle. So these things are selling that time. These things are buying that time. Okay. But there are also some short ones. Okay. There's a combination of these candles across the charts. You will find this. There's a small ones. There's a green marupazu. Okay. It's called because the Japanese name this candlestick. It started from Japan, and you can see what is the difference between this and this one. Okay, what is the difference? Can you tell me? Yes, they are both green, but they are not the same. Why? What is the difference? Can anyone answer this? Yes, Albert, it's solid. Yes, there is no wick. Okay, this small wick here, my friend. It was going down in some point in time. It was a red candle. Okay, I will show you the anatomy of this candle once we go to the chart. But it was once a red candle, and suddenly it went up until it closed there. This one didn't go down. It just went there and goes straight. And this one on the other direction, it went down. So there is no wick. And there's many more I can discuss with you, but time is at the premium. I cannot explain all this because time is at the premium. We only have 1 hour of this webinar, so just take a screenshot of this one. At least have some idea, and in the coming days, in the coming webinars, we will discuss this more. Yes, Mr. Ken, it's the week. You are correct. All right. So moving on now. Okay, in Forex, there is also trend patterns. Okay, you will see some reversal patterns. Okay, this is the time you will buy or sell. Okay, for example, I will just give you one example. Bearish double top. When you see this double top, it means double top. It means like a double one, two. Okay, there is a price when in at this point in time, and this one also went there in some point in time, and it made a double top. Okay, but the price cannot go up there. There's a resistance here. And finally, it broke the lower high. This is the lower high because it was bullish. Okay, it was going up, made a retracement, and it tries to go there, but it didn't. There's a resistance. So it broke this lower high. And once you see this pattern, my friends, that's the time you will sell. Okay. Same with the triple top here, or they call it the bearish head and shoulder. Why head and shoulder? This is the head. This is the shoulders. Okay, left and right. This is the head and shoulder pattern. This is also very famous. Once you see this one breaking all this lower high here, and that's the time to sell in this direction. Okay, don't think of buying. Once it broke this one, it's in the bearish trend. Huh? And there's a lot more. Okay, hope you will screenshot this and you can have the idea of what we are talking about. Maybe in the next webinar next Thursday we will discuss more of this, but for now this is very important in trading. Okay, if you want to read the chart well, you have to understand this. Okay, at least these two is very powerful. Okay, these things, okay, this can also occur in the chart. But if you have an eagle eye, okay, when you when I say eagle eye, you've already experienced a lot of these chart patterns, and you will see this one. Okay, it's going a channel, it's squeezing now there, and once it broke this trend line, and time to sell now. Okay, it can happen in any occasion, in any day, in any market trend. But practice makes perfect. If you will not try to analyze this in the chart, and you will never see this. That's why practice makes perfect. So you have to practice, okay, identifying these trends, and the more it will give you uh, the chance of profiting well in the market. Because you cannot just sit in the chart and just guess, okay? I will just guess, maybe this will go down, this will go up, and you are just guessing, okay? You are just gambling in a way, because you don't have the fundamental knowledge, basic knowledge about candlesticks, and there's a very big chance of you of losing in this game, okay, my friends? Because Forex is also like it's also like gambling, but legal gambling. Okay, in your mind, in your heart, this is very legit. Okay, because you are only is the one to blame here. Okay, because no one can. You cannot blame someone because you didn't win. Okay, because you didn't have the basic knowledge of trading. Okay, so you have to take this very seriously, my friends. Okay, 100,000 or even $1,000, $2,000. This can go very fast if you don't know what you are doing. Huh? So always be very mindful of those things, my friends. Okay, so we are here, okay, to avoid this, because at some point in time I was also like you. Okay, I don't know anything. uh, Yes, when you are a newbie, you are very excited when you see these things going up, going down. You want to buy, you want to sell, but when exactly do you know when to buy or sell? Okay, that's the question. Anyone can make a lot of money here, but why do you think those profitable traders are earning thousands, even hundreds of thousands of dollars? Why? Do you think they have this time machine and they can go 1 hour into the future and check all this price action? No, they don't have that. What they have, my friends, is the skill set. The skill set is what makes them profitable. Okay. Before I was chasing the money. Okay. I want $100 today. I have to do it. Okay. I have to make it. But no, it doesn't work like that. Okay. You have to wait for the right time and the right opportunity to place the trade, to be a sniper, to have that sniper entry. That's the main thing here. Okay. You have to wait for the right setup. And when you see these patterns like this, my friend, get ready for your deep pockets. Okay. Because once you see this one happening, profit is on the way. Okay. The money will come to you. Okay. Don't think of chasing the money. Let the money come to you. When you have this strategy, regardless of how bad the situation, but when you have this strategy, okay, the money will come to you. Okay, don't chase the money. Money will come. It will come one day. Believe me. Just master the basics and you will get there. Okay, so moving on now. Okay, understanding trend lines. Okay, there's a trend line. Okay, this is the trend. This is the line. Okay, it's going in an uptrend. Okay, when it goes there, it means it's in an uptrend. But when it's pointing downwards like this, downtrend. Okay, yes, my friend, we are all here to share our experiences. Okay, don't chase the money. As I've told you, don't chase the money. Let the money come to you. If you will have the strategy, the only thing that will happen now, money will now come to you. Believe me, remember what I told you. Don't chase the money. It will come one day. Maybe not today, maybe not tomorrow, but next week, okay? By next week, this money will come to you, okay? Just always believe in yourself, okay? Like we all do, okay? We all believe in ourselves that we can make it, okay? But my friend, okay, I will tell you now this early in the game, okay? Trading, okay, Forex trading is not for everyone, 100%. Why? Because those profitable traders, okay, will only be rewarded for those who are committed. If you are not committed, like you are not dreaming, okay, you sometimes you dream, but if you are not dreaming about Forex, then believe me, and it will humble you. It will really humble you, okay? I'm not trying to scare you away, but now I'm opening your mind, okay? This is something very rewarding if you know what you're doing, okay? So always remember, my friends, you have to respect this idea, okay? Trading doesn't care who you are. Believe me, 100%. It doesn't care how good looking you are, how pretty, handsome you are, how rich you are, how much money you have. This is nothing. We are nothing compared to the 7.5 trillion market cap. Okay? We are just following the trend. Okay? What these guys are doing, these hedge funds, these big institutions, they are the ones moving the market. Okay? You cannot fight this. Believe me, 100%. You cannot fight them. But you can only follow them, okay, and profit along the way. Okay, so always remember that, my friends. Okay, I know you have these hopes and dreams of making it big, but those profitable traders, they've gone through a lot. Okay, they cried blood for this, so you have to uh, respect that idea, huh? Now, trend line. Okay, there's a lot of to say here. Let's just go through very fast. Okay, what is a trend line? Trend lines are easily recognizable lines that traders draw on charts to connect a series of prices together or show some data's best fit. Okay, the resulting line is then used to give the trader a good idea of the direction in which an investment value might move. A trend line is a line drawn over pivot highs and under pivot lows to show the prevailing direction of price. That's why when you see this one, okay, it went down, it hit this, okay, it went up, so it was bullish, but it retraces, okay, and then but it didn't broke this low. Okay, this is the strong low of this move, but it didn't went there. It bounced here. On the second bounce, you can start drawing this trend line. Okay, and it will go up, breaking this high again, and then it will retrace some. Best believe on the way down, you now have the idea that at least this trend line will be respected. And when it hit this trend line, it bounced there and went up. That's it. The same for the downtrend. Okay, hitting this trend line there, respecting this, so you are now in a downtrend. This is an uptrend. Okay, so that's the idea. Okay, trend line is a line. Okay, trend lines are a visual representation of support and resistance in any time frame. They show they show direction and speed of price, and also describe patterns this during periods of price construction. So, and you can read more of this. Okay, important thing is trend line is a very powerful tool in as a trader. Okay, they use trend lines because that's one way of reading the chart. How do you know if this is going up or this is going down? You use the trend line. Very easy. Okay. Now, what is a pip? Any idea? Pip. Okay. Since Many are newbies here. This PIP is what drives the market. Okay. You know, when you change your $100 to 5,900 peso, they are making money because of this. This cents, okay? I don't know. Yes, percentage in points. Very good. A PIP is the smallest whole unit price move that an exchange rate can make based on Forex market convention. A PIP is 100 of 1%. That's very small, huh? Like, how can I get rich with this? But you will soon discover how it's working. Okay, most currency pairs are priced out to four decimal places. So a single pip is in the fourth decimal place. Okay, 1 is to 10,000. For example, the smallest whole unit movement up or down that the USD Canadian dollar currency pair can make is 0.0001. Okay, see, it's in the fourth place. Okay, or 1 pip. That's it. This is what making it. It's on the fourth decimal place. Okay, this one here, that's the pip, my friend. Pips used in forex trading should not be confused with BPS or basis points, which are used in the interest rate markets and represent 1 is to 100. So, for example, okay, PIP is an acronym for percentage in point or price interest point. Very good, Mr. Kent. You got this right. So, calculating the PIP, okay? I don't know if if you're all getting all this information all at once now, but as a newbie, I know this is very complicated. I say, what are you talking about? You see, my friend, when I was a beginner like you, the more complicated things are, okay, the more I want to understand it. Okay, I'm not getting bored or losing interest. The more I want this one, the more I want to master this one. You have to have this mentality. In trading, every small detail, every small information, knowledge is power. Okay? A pip's value depends on the currency pair. Okay, the exchange rate and the trade value. So when your forex account is funded in US dollars and US dollar is the second of the pair, okay, or the code currency, just such as with the Euro USD, okay, so the USD is in the second pair, you find, okay, against the euro pair, the pip is fixed at 0.001. So read all this, my friend. Okay, we have the time is at a premium. I cannot read all of this to you, but you get the idea later what I'm talking about. Okay, for example, now I will go to this Japanese yen is the exemption. Okay, Japanese yens are quoted with two decimal places. Instead of four, it's quoted in two. So, marking a notable exception to the four decimal place rule. For currency pairs such as the Euro JPY and the USD JPY, the value of a pip is 1 is to 100 divided by the exchange rate. For example, if the Euro JPY is quoted at 132.62, one pip is 1 is to 100 divided by 132.62. And you will get this. So with the lot size of 1,000 euros, the value of one pip in US dollars would be 7.54. Now you only have two decimal places. Okay? That's the difference. You will see this in the chart. Why like this? Well, this is the this is the rule. Okay. Now, how to calculate the pips in gold? For example, in gold, XAU, gold is XAU, US versus USD. So it's, for example, 1895.25. This is now the pip. Okay? Number of pips is equals to 1895.25 minus 1895.20. Okay, the difference is 5 pips. So this is now the pip. All right. So how do you calculate this? For example, my target for today is 100 pips. So you have to uh, increase this to 95. So it will be it will be 1,905 like that. It will be 1,905 to achieve 100 pips. Okay, that's the idea there. So you will clearly see it for in this example. Okay, for example, you have $1,000. You want to risk 2%. So 2% of $1,000 is $20. Okay, this is your stop loss. So your stop loss is 50 pips, for example. Okay, pip value per one lot is $10. So for example, $1,000, you have your $1,000 now in your account. Multiply that by 0.02 because of the 2%. So it will be 20. All right. And because the pip value of one lot is $10, so 10 times 50, 50 pips of stop loss, that's 500. So it will give you a 0.04 lots. Okay, final position size is 0.04. So what is the position size anyway? Any idea? If you want to trade, you need a position size. A position size, my friend, okay, in Tagalog, this is your bet. Okay, yung taya nyo. Ito yung taya. Okay? So, 0.4, 0.04, 0.4 is not the same as 0.04. There's a difference here. I will explain to you now. Okay? For example, 0.01. How much is this in the equivalent in US dollar? Can anyone tell me? What is 0.01? How much is this? Any idea? For those who are trading already, what is 0.01? No idea? Yes, the lot. How much is this? What is the equivalent? Anyone? No idea? Okay. 0.01 in Forex, the position size is 10 cents. 10 cents. Not $10, 10 cents. 0.02 is what? I think you can guess now. What is 0.02? Anyone? 20 cents. Very good. Aura, Royce, Miguel. Very good, my friends. 20 cents. 20 cents. Nothing, right? It's like nothing. 0.03. What? 30 cents. Very good. Josh. And so on and so forth. Okay, my friends? When you reach 0.10, what is this? There's a difference, huh? 0.01, 0.10. No, or no, not $10, my friend. You're going fast, huh? If I can trade the $10 per pip, my friend, I am a big big trader, huh? $1. Very good. That's it, my friend. And so on and so forth. By you increment this by 10 cents, zero. Okay, what is 0.11? What is 0.11? What is 0.11, my friends? $1.01? No, because by 10 cents, you just add 10 cents. 10 cents plus $1 is what? $1.10. Very good. $1.10. That's it. 0.12 is $1 and what? 20 cents. That's it. 20 cents. And so on and so forth. 0.13, $1 and 30 cents. Always add 10 cents lang. 10 cents. You cannot add 5, you cannot add 9. There's only increments of 10 cents, huh? 10 cents. Now $1, 30 cents. $1, 40 cents. So $1.40 is what? 0.14. Okay. So who can tell me $2 now? A $2 position size is what? Point 0.2? Okay. Aurora. Okay, Aurora. If that is your name. Always, always say zero. Point no, point two, point three, no. Always have the zero in mind. Okay, always say it in your mind, by your lips. 0.20. That is $2. 0.21, $2 and what? 10 cents. Very good. Always add 10 cents. Okay. $3, 0.30. $4, 0.40. $5, 0.50. Okay? This is not 30 cents, huh? This is 30 cents. 0.0. There's always a zero. But this one doesn't have 0.30. It means it's now in the tens. One, okay? Sorry, ones. It is now in the ones. Okay? This is cents. This is ones. This is tens. Okay? So we are the ones. So when you reach 0.90, that is $9. Okay? What about the tens? What is $10 now? Tell me. Come on, my friends. Time is running fast, huh? We have 10 minutes to go and we didn't finish the slide yet. One lot. Very good. So that means 1.00. That is $10. Sorry. That is $10, huh? $2, $20, and so on and so forth. When you reach these lots, my friend, prepare to be a very rich man. Huh? But we will start here at 0.01, 0. Okay, when you get profitable, okay, you increase by 10 cents. When you reach $1, very good. Increase it to add 10 cents more, 11, 12. Then when you reach $2, very good. Congratulations. $3, $4, $5, $10, $20, and so on and so forth. Okay, so now you have the idea now of how to have the position size in Forex. Okay, so let's see. Okay, if you will go to what is that? Position size calculator. Okay, when you Google position size calculator, you will see this. Okay, go to my FX book. Okay, position size calculator. Okay, XAU USD. There it is. Okay, currency US dollar. For example, you have $1,000. No, okay, $1,000. What is your risk? What is your risk in trading, my friend? How many percent? Tell me. The normal risk tolerance. 10%? Congratulations, Mr. Kent. You are now a very rich man. If you have 10%, if you have a 10% risk, you are now a very rich man. Okay. For beginner, even for profitable traders, the most conservative type, 2%. 2%, my friend. Stop loss. Any idea of a stop loss? A stop loss, my friend, okay, for example, if the trend goes against you, okay, you were buying, you place the trade, you were buying, you are now thinking this will fly now to the moon. But no, it went down. So what? If you will not have a stop loss, this will burn your money, okay? You have to put a stop loss to stop it, to stop you from losing. That's why it's called a stop loss. So for example, if it hit the 2%, my trade will close automatically. Okay, so 20 20 pip stop loss, trade size lot. Okay, this is now the norm for gold. Don't touch this. Calculate. Okay, you see, 2% of 1,000 is $20. Okay, that is your what? That is your losing tolerance. If you lose 20, it hit your stop loss, it means you only lose $20, not 200 because of 2%. Let's increase this to 10%. How much you will lose in 10%? Goodbye $100. You see? You see the difference? Yes. If you are winning, this is very good, 10%, and your sizing now is 5 lots. That's $5. Compared to 2%, okay, you are losing $20 only. Okay? Let's say you are now profitable. Okay, you can increase this to 50 pips, 2%, but still 2%. Okay? This is your lot size. Okay, just like in that example, okay, this one. See? 20%, 2% of 1,000. Okay, 50 pips stop loss. Your lot size is now 0.04. Okay, that is $20 only. Okay, you are losing $20 only. Okay, so this is very, very important, my friends. Okay, my FX book, Google position size calculator, and you don't need to get your calculator and calculate like this. Okay, you will just go crazy with this one. As a beginner, the more you will go, like, what is these things? I don't understand. But with the help of the position size calculator, you can have this exact position lot size for your trade. Okay, so now let's go to the slide here and finish this off. Okay, many things here. Okay, the trading process. Okay, first of all, you need to stay flat and wait for an opportunity. Okay, you have to see the chart. You have to read the charts well. Okay, when to enter, where to enter, and then you will have your entry. Okay, enter at the market price or a pending price. Enter the trade in multiple parts or how much of the position. Position is when you should hold the position longer or when should you keep it or short. Okay, exit, take profit or stop loss exit. Okay, whatever. This is manual. This is automatic. Okay, if you want to close your trade, you can stop it. Okay, and then finish the trade, close your trades, or a stop loss. Regardless, you will go to sleep, and when it hit your stop loss, it will protect you at $20, just like in that example. Okay, it will not go further than that, so you can sleep well with your stop loss. Okay, that's why stop loss is very important. We will go through this in some other webinar. I will show you how to place the trade, but now these are the fundamentals. Huh? The difference between financial trading and physical trading. So just like what I told you, okay, in real world trading, buyers and sellers markets are often separate, and there's usually an info gap. Okay, the trade might go from A to B, then B to C. As the middleman, B, you can profit from the different. That's why the middleman, okay, in any business, there's always some middleman who are making all this profit. They know how much he will take from this guy and how much he will give from this guy. So he's making profit there. That is the difference. Okay, in the financial market, things are different. Buyers and sellers are trading at the same time. For most traders, some big institutions might get early info, so there's no absolute info gap. Okay, all prices are public. Everyone see the same prices in the charts. You have to judge whether a price is high or low and decide whether to buy or sell based on what you see in the market. So that's Forex trading, and that's the power of Forex. Okay, you have everything in the same playground, and anyone can win fairly. Okay, trading is a challenge to humanity. There is one story here. Okay, this guy named Jim Slater. Okay, a bold and ambitious investor who had already built a reputation of spotting profitable opportunities. Okay, achieve his rapid growth, impressive returns, attracting attention across the financial as the market continued climbing in 1972. Slater expanded aggressively, investing heavily in shares and businesses that seemed unstoppable at the time. Profits came quickly, reinforcing his confidence. Like many investors during that boom period, it appeared that the market could go only higher. However, by 1973, just 1 year, economic pressure began to build. Okay, the global oil crisis, rising inflation, and tightening credit started to shake the foundations of the British economy. When the stock market turned downward, the effects were so severe that the period became known as the secondary banking crisis of 1973 of 75, and it hit highly leveraged firms especially hard. Slater Walker, which had expanded rapidly using borrowed money, found itself under intense financial strain. Confidence evaporated, share prices plunged, and the company required support from the Bank of England to survive. So Jim Slater eventually stepped down as the empire he had built unraveled during the crash. His story became one of the most striking examples of 1970s boom and bust cycles. A reminder that rapid gains during euphoric markets can quickly reverse when economic reality sets in. Okay, so the moral of the story here, my friend, okay, trading is all about testing your own psychology. No matter how skilled you are in your field, you can't control your emotions and haven't trained yourself over the long term. The market can wipe you out just as easily, which is very true. Okay, the forex market will humble you, my friends. Okay, just believe me when you see this. The okay, because in forex, okay, we're always looking at our phone. When you see this in red, you start to tremble and perspire, sweat because of your money going to these people. Okay, so always remember that. So trading is a challenge to human nature. Okay, many times, my friend. Okay, all this, okay, by the long shot, okay, the easiest and fairest information you can get is the price data on the charts, the candlesticks. The candlesticks is telling you the story of the market. Okay, so we have to understand this. But for now, I'm just giving you some very brief insight about this. By analyzing these price movements, you can actually develop a long-term consistent product trend. That's why technical analysis is so important when you're trading. Okay. Now, before we finish this, it's already finished. I will just show you the trading view. Okay. For example, okay. This is the platform called Trading View. Huh? Trading View. Trading View. Okay. You can go there in that website, tradingview.com, and you will see this. Okay. You will see this and you will put your asset here. This is XAUUSD gold. Okay, my friends. We will go to the basics. These are the candlesticks, the green, the red, and everything in between. Okay. There's always a difference between these, my friends. Okay. What is this 1M, 5M, 15M, 30M? What are these, my friends? Can you tell me? Time frames. Very good, Ken. 1M is the 1 minute time frame. Every candlestick here is 1 minute. Okay. You can see it here. You see there's a timer, 26 minus 24. Okay, let's see. This is just after 1 minute. Okay. After the 1 minute, a new candle will form here beside this, beside the price close. Okay. It will close somewhere there. 7, 6, 5, 4, 3, 2, 1. It will open there, exactly there in the closing. Okay. And now you see a red candle. Okay. In 55 seconds, it will close. Maybe it will be a green, a red. No one knows. That's the idea, my friend. This is every minute. 5 minutes is a different story. Every candle here is 5 minutes. So this candle has been going on in 5 minutes. So in 2:36 is the only time it will finish. So you will count one, okay? It started here at 20, okay? So it here, from this candle, okay, who knows? Okay, background, opacity, okay. 1, 2, 3, there should be 5 candles inside this. Okay, this is the third candle. 5, 4, 3, 2, 1. Okay, there's another candle. There's the fourth candle, but in the 5 minute, it's still going. It is still going, my friend. You see that? Okay, now you have the idea. In 2 minutes, less than 2 minutes, this will finish. But the story of this 5 minute candle has 5 candles inside this. It opened there, it went up, it went down, it went up, it went down. So it's going there like that. Okay? This is now the week. It opened there. Okay? It opened there at 5144. 5144, it opened there, my friends. Here. 5144. It opened there. But you know, this is now the week. See this wick forming, this empty space here. That's the wick there. See, there's the wick. Okay, it opened there. No, it's just going there, but it was going up and down in its life in its lifespan. Okay, you can compare that now. Okay, in less than 1 minute, this will finish. One, two, three, four, five. This is the last 5 minute candle here. It will close there. Okay, this is the high. This is the low. The lowest it has become. That's why you have this wick here in the 5 minute. There. Or expand it like that. You will see it there. See? The lowest and the highest it become there. That's the idea. Okay? 15 minutes is the same thing, but 15 minute is the time. Okay, it has 10 minutes to go to close its position. Okay, my friends, that's it. 30 minutes. You see how long it takes to form one candle? 1 hour, 4 hour. This is a 4 hour candle and the daily. This is one day. This is today's daily candle. It started from 6 o'clock here. It went up there. It went up there at some point in time today and it went down. Okay, so if I will mark this one, you can see this candlestick story just by doing this. Okay. Okay, so if you will go to 5 minute now, you see, at 5 minute, you can see the whole story. It started there, it went there, and now it started to go down. Now it's down there, and now it's going on the way up again. And in the daily, it looks like this. You see, it went up there, it went down, and now it's going in the middle. Now it's there. See, now it's there in the middle. So this is all the wicks. Okay, it opened there. See, if I will make a candle here, for example, it opened there, so it opened here. Okay, it went up there with all this price action here. It went up there. Now it went down here. Okay, and then it's here. Now see, this is now the wick. See, this is now the wick. It went down there. See, now the price is here, and it opened there at this point at the 7 o'clock today. You see the timestamp, Tuesday, 3rd of March, 7 o'clock. It went there. It was a green candle, huh? It was a green candle, and then it went there. Okay, bypassing this line here. This is the opening price. Okay, it went there, and then it went to the opening price, and then it went down. Okay, and then it closes there. That's the anatomy of the candlestick, my friends. Okay, now it's in the red. Sorry. Now it's a red candle. Okay, so that's it for tonight's webinar. I will just read this for you and finish the webinar. So about Algotur is a quantitatively driven trading company focusing on market making and multi-asset trading. Its expertise spans various asset classes, including futures, option stocks, commodities, Forex, and even cryptocurrency. Okay, Algotur is a quantitative trading service company with over 10 years of experience in strategy development, focusing on proprietary trading. So you can read more about this, my friends, okay? Let the numbers talk, okay? 60 plus thousand clients every year, 150 plus available traders, revenue in 2020 was 46 million, and 265 plus staff members worldwide. You can always go to Algotur's website and read more about this amazing company. Okay, my friends. And as you know, in Algotur, okay, there's always an edge while using this. See, there is a copy trading feature. Okay, what means whatever uh, traders, okay, you can always replicate what they are doing. So you just follow their trades. That means less less hassle for you when you are a busy person. You can always start trading, start with only $100, and you can copy what other traders do and capitalize by the end of the day. So very easy, okay? Or you can always contact our Algoter managers, and they can help you how to avail uh, this opportunity, okay? It's very nice. You can always have some money on the side while you are busy. All right. And as you know, there's some insurance program here where you keep 100% of any profits you make. Originally, this was 1,500, but now for only 500, you can avail this very good insurance program where you can have an monthly return of investment of a sweet spot here of $6,000. You can have a 26.79% profit gain. Huh? Always contact our Algoter managers and they can further explain to you further about this program. And lastly, you know, Zoe. Okay, Zoe is a global financial technology company under the Zoe Group, headquartered in the United Kingdom with operational centers in Hong Kong and the United States. Specializing in CFD trading, Zoe offers a diverse range of financial products, including Forex, precious metals, oil, indices, and US shares. Zoe is fully regulated, offering secure, professional trading experience with competitive fees, fast execution, and powerful tools to grow your investments confidently. Okay, available on Google Play and App Store. You can go now to your phones and download the Zoe app because we will be trading on this platform. Okay, my friends. If you are an app user, if you are an iOS user, go to the App Store. If you are Android, go to Google Play and you can download Zoe. Just scan this QR code and you can easily download this. Okay. And as you can see here, okay, go to Zoe, how the Zoe platform looks like. It looks like this in your phone. Okay, very nice. You can read more about this, okay? And you know, get to hang around about or explore the app. Okay, very easy, very easy. Don't worry, okay? Just start installing this now on your phone and we will trade here using the Zoe app. All right. And lastly, our 50% deposit bonus. Please avail, deposit 100, you get 150, 500, 750, 1,000, you will get $500 extra. Who will give you $500 extra? Even your brother and your sister, they will not give you this kind of money unless you are a very rich man or a very rich family. So please avail, my friends. Don't forget, 50%. No other broker will give you this. Okay. Now, before I wrap up this webinar, I know we are a little over our allotted time, but as you know, my friend, in trading, okay, it is the prices also are getting affected because of the current events. You know that why why the oil prices just go high all of a sudden because of some news? Why? Because this is the reality. Okay, geopolitics. Okay, are affecting the prices in the market. Okay, because when geopolitical tensions escalate, the markets react almost immediately. And what's happening now? What is now in the news? The Iran-U.S. war or Israel-U.S. connivance against the Iranians. And now expect some volatility in gold. This could potentially bring us to new prices yes, in gold. For example, now what is the current price? $5,187. Who knows? We will reach 6,000 now. If you go to daily, at some point in time, it reached this. What price is this? 5,596. Now gold is playing here, but anytime now this will fly. Okay, this will create a very big green candle here and one big green daily candle going up there. This is my forecast. Okay, it will give you this big green candle there. Bye bye, sellers. I am now a very rich man once more. Anyway, that's just my guess. So that's why, my friend. Okay, because the currency, okay, of okay, major currencies like the US dollar, okay, and the Japanese yen can strengthen during this risk off periods, especially these wars, okay, while emerging in the uh, while emerging market currencies may weaken due to capital outflows. Okay, so for example, why do you think your plane tickets just increased exponentially? Because of the oil. It's everything is affected. And before you reach the airport, your taxi will yes, the war, Royce, the war affects the demand of a certain product. Yes. For that, because gold, especially gold, this is a safe haven. Why do you think China is buying? Yeah, China or many other countries are stocking gold bars to protect, because gold is really the real asset here. It's not getting printed. You need to mine gold. You are even mining crypto, but gold is the world standard. Okay, you cannot just devalue the gold at any time. It's just going up. It never went down to zero. Maybe crypto will go down to zero, but gold will never go to zero, my friends. So it's a safe haven. That's why gold now, many gold traders are profiting a lot because of this bullish run since the beginning of 10 years ago. It's just going up, up. I reached, when I started trading, I reached the price of gold at $1,000. Can you imagine? $1,000. I was trading gold when it was $1,000. Now it's 5,500. It's just going up. Who knows? We will reach 6,000 before February ends, or sorry, before March ends. By April, we are now in 6,000. Imagine this. No one can really have foreseen this growth, but now we are seeing it for the first time. In the last 2 years, it's gone from 2,000 to 3,000, 4,000. I've seen it from 4,000 to 5,000. My God, within the year, we just went like that. So always remember this, okay? News events, okay? Global news events are impacting gold. Huh? So if you are trading gold, for those who are trading, I know gold is very volatile, but it can also reward you very fast, my friends. Okay, so always remember that. And I think that's it. So we've reached the end of the webinar, and next time we will discuss more on this. Okay, I will teach you how to, or at least share all the secret sauce how to trade this. Okay, for example, this trend line. How do you draw a trend line? Okay, is that a trend line? It looks a trend line to me. Okay, you just connect all the lows here. Okay, okay, it's reacting to this. So this is a very good support. Okay, and from here, there's a resistance there. And now there was it becomes support at one time. Huh? So it's bounced there. You see, it broke the resistance, and now it becomes the support on this trend line and going to the upside. And who knows what will happen in the coming days? Maybe it will target this one. It will go there and react to this and fly to the moon. just like anything can happen. Okay, but we will know why this is happening. Okay, it's giving this. Okay, you will know more about support and resistance, fair value gaps, market structure, and everything in between. Okay, I will go to that once again. Thank you for joining for tonight's webinar, and I hope you've learned something new for the newbies. Of course, I know the newbies take it slowly. Okay, slowly but surely we will get there. We will open all the secret sauce, okay, for you to understand and read the markets. Okay, my friends, until we meet again. But first, don't forget to download Zoe on your mobile phones. And by next time, we will see and discuss more about this. Okay, thank you, my friends. See you again, and see you next Tuesday, the same time, 7 p.m. And we'll have some more lively discussion. Okay, thank you, my friends. Bye bye.